The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon. 877-927-6648 is the number to call, as you heard from Steve Rhodes. That is the number where you can reach us and ask your questions on the market. And a couple of things I just want to get done here beforehand. Last night, very interesting, I'm not sure you could call it a lecture. It was really presentation by Stanley Dash, his Vice President of Applied Analysis over at TradeStation. Thank goodness to Bob for letting me know about it. I just earlier in the day got that email, and it was really important. I wanted to go, I wanted to meet him. I wanted to meet him for a couple of reasons. One is I wanted to get that resolved where I have lost data. I say lost data. It isn't lost data. It is there somewhere. It's just that there isn't an autosave, I believe, and that's why when it suddenly shuts down for whatever reason, it comes back with a different, I call it a platform or a library. Actually, it's the same platform. It's just a different library. It goes to a different saved area. I just got to get that figured out. It's a little frustrating to do. I do these charts really quickly, but it is a little frustrating, and it's more my issue than theirs. Because they are looking at mostly people who do not just annotate on the charts. Mostly people do the functions. They do software analysis, and they've got all these programs that they work on in TradeStation. So I just wanted to mention that it was really very good, because what I found fascinating, actually, you didn't even talk about TradeStation very much at all. He gave a presentation and he showed different charts, and he showed a chart of the TNX, which I thought was absolutely fabulous. Hopefully I'm going to go to that. There's no real rush to go there. I mean, the consensus is that we've made some kind of a pretty serious top in bonds, but meaning that the low in the 30-year, 10-year, and 5-year are probably in. Could be a retest, but basically, that's what we're looking at as the Fed unwinds. So that is, in essence, what we're going through there. But we looked at a number of things, and one of what I thought was absolutely fascinating, he showed gold charts, but he had all these different positions of the you can get a trend line, or maybe we won't call it a trend line. You can get a moving average based on all the different aspects. That's the cart to open interest, and actually that's one of the issues that he was talking about, the non-commercial net change, cart net positions, and cart total positions. And basically what he was showing on this chart was that gold, for the first time in a long, long time, has seen net sellers. The question came up, are they shorts or are they sellers? And basically the analysis was that these people are buying less and less, the implication being that they're probably at that pivot point where they've started shorting, and that, yes, there could be a bounce at any point, but gold in the longer-term aspect of gold still has it pointing lower. I think that was really interesting. And then over and above that, we looked at different charts, and it was just a really nice presentation to show different aspects of the market, looked at from a person who was a floor trader. He was everywhere. He had been all over the show, and now he's in this particular position. So I love that. I even got to get some new symbols that I've never used before. And also I got to finally figure out why when I go to at gc.p for my long-term continuous contract, all my continuous contracts never show the daily. They show them as a single price point, like you do in the mutual funds. For the day they just give you the closing price, but in the weekly shows you the whole bar. Well, I couldn't understand. Of course, he figured it out for me in one split second. He figured it out in one split second by telling me to go to at gcno.p, because it takes you to the pit, and that was my mistake. And that's the same thing with high-grade copper. So I'm going to have to renotate all those charts, but I want to have the daily charts of the continuous contracts. Well, let's go straight to the market right now. The Dow's down 32 at 15,000. Oh, this is so interesting. For my subscribers, the principle of my work is that you're going to go from a low bar, most identifiable low bar, to at least a peak D. That is the formula. You can go to an EF and you can go on, but you want to go step by step to at least that fourth highest peak if all the conditions are met. Well, the conditions in the 120-minute chart were met, and I said to subscribers, I think that very early on, we will get that little minor spike from the high of yesterday, which is at 15,320.42 to just above it, and then we will pull back in the 120-minute chart, and that means also that leg C will continue up in the Dow, and we might start to get a variety of conditions here, and I'm going to explain that as well because it's so important. What we've got now is the peak D with the Dow going to 50,327. Now, was that good or was that good? 7 points higher for D. Now we're pulling back, and with the Fed coming up, I suspect there's going to be some tenuous trading, tentative tenuous trading, and then we'll see how the support comes in, but we've got a potential peak D if there's no new high bar in the next 120-minute bar on the 120-minute chart, and the VIX is rallying a tad. It's up 25 cents at 14.60. It's still really low. Now, it was another thing. I asked Stan at the end of the show, end of his presentation yesterday. I said, Stan, what about... he did all these different charts and everything. And I said, what about the VIX? And his contention was, and a lot of people feel this way, is that VIX doesn't have relevancy anymore. But basically what he then said was, actually, I don't use the VIX that much, so it just means that for me, I don't use it. Other people might use it. And I thought that was really interesting. That was a bravo for him for just being right out and saying that, because a lot of people put a lot of emphasis in technical indicators that they really don't use. I'd say wrong. For instance, I don't use volume in the market. I use on-balance volume a lot. I use volume only at specific places. And that doesn't mean to say it negates volume. There are people using volume all the time, very successfully. It's what you use, and the emphasis last night, as well as what I try to do all the time, is to say, if you have something that works for you and it works over and over and over again, you must keep using it. Because it is your tour de force. It's what keeps you in the game. So here we go. The Dow's made a new recovery high at 15,327. That extends leg C. The S&P, on the other hand, had a high of 1654.18 yesterday. Today it went to 1653.67. If by the end of the day, and we know what kind of a day this could be, there is no new recovery high, it has made a peak C. So now, let me do this. Let me go to the E-minis. I'm going to mention something here because I know there are a lot of you who use futures, and I use a slightly different technique for futures. In the futures, yes, this is leg B, and it's probably a peak B of 1649.00 is not taken out. That's number one. Number two is that I like to be ahead of the game. So I'm going to call that 25-cent difference right here. In fact, I'm going to change that color so people know what I'm doing. I'm making it red. Right there on the 27th of June at 1614.25 and on the 28th of June at 1614.50. I'm calling that a potential phantom week, Chapman wave phantom peak. Why? I want to be in sync. So that means that the S&P and the futures are in sync, and I've legitimately, for the techniques that I use, been able to use that 25 cents. It's not a dollar. It's not 75. It's 25 cents right there. And the reason being, I don't want to go through it now, when I went through the shorter time frames, it actually showed that there could very well have been a peak there. It just needed that extra. It should not have gone at 25 cents. 50 cents actually higher to make that, and it should have been a peak. So I'm using it as a phantom peak for now. Hey, wait a minute. But the NQH13, wrong. NQH. What am I talking about? NQ. Oh, U. NQU. I have to call that leg B. So they might be in sync, but it's okay. I've just got the heads up. And not only that, the NASDAQ futures, this is A, B, C, D, have made peak D in the 120-minute chart. That's an E. So this is A, B, C, D, yep, in the 120-minute chart. So the pullback, yep, I'd expect a little bit of a pullback here. Now what I really wanted to get to is I wanted to show the S&P. Look, SPX.X, so far it's made a peak see if there's no new high above 1654.18. Hey, but wait a minute. What if I go like this and I go to the SPY? Coincides. Peak C. You see, I'm trying to line things up, but I can only line them. I can't do it on the NQ, but maybe I can do it on the NDX. Let's check the NDX. I wonder if this is going to show me that. Yep, is leg B. Okay, so the NDX is the strongest. The IWM, which is the Russell 2000, is in leg B. So this is really fascinating. The small caps and the NASDAQ is trading in leg B up, and that's a very big positive, at least for now. And even more important than that, we're going to go through the monthly charts if I can later on. There's no, it's the middle of the week, so there's no rush to do that, but it is really important to be able to keep up and to see how things are going. That's the one thing. Now, the other is I wanted to just quickly run through. Look, gold is up $10 right now at $12.50. I'm going to talk a little more about gold in a short while. Silver's up 0.08 at 19.21. Platinum is up 6 at 13.72, and high-grade copper is trying to rally. It's at 3.09. Now, crude oil is up 2 at 105.67. I've got a feeling that if anything is going to make the market a little bit nervous, it could be if crude oil really, not just rallies, but spikes much higher into the 106, 107 area from here. I'm going to be watching that real closely. Bonds are down 10, 30 seconds. You know, they just haven't been able to do anything. And the dollar was up, and now it's down 0.40. And I wanted to show the dollar, and then I want to show and then something else right now. Yeah, we go. Look, the dollar is making a potential peak B. Peak D at this particular point. 84.23. I'm a little behind. The contract is actually 84.37. So that tells me you got to be a little careful. But wait a minute. It's a peak G in the 120-minute chart. That says, yeah, you could pull back, but there's tremendous support round about 83.64. Not too not too far away from you after such a spectacular move. And 83.81 is the 9-period moving average, and that takes me to gold. And I'm going to go straight to Marvin in Orlando. Hi, Marvin. How are you?
Hi. How are you? Thank you, Basil. Look, if you could take a look at GLD, is there any way to tell if it's making a bottom of some kind?
Yeah. Now this is going to be very interesting. There's a pattern that I've discussed so many times here. And I actually got my CD all prepared to discuss this, another chart pattern, which is the breakout pattern, which I wanted to talk about in the dailies of the Dow and the S&P. But more importantly, there's another pattern. And I'm going to talk about this in terms of the GLD. The GLD is the Spider Gold Trust. It's trading at 121.54. Now, I have to say that there are patterns that repeat over and over and over. When I ignore those patterns, and I say to myself, sentiment and what people are saying is telling me that such and such is going to happen, and I get into a little bit of I wouldn't say a panic, but I get into a forced situation. I got to be real careful, and I'd like to step back and say, let's look at this as objectively as we can. We're going to look at the GLD. I'm going to discuss chart patterns. I'm going to prepare some charts that I want to look at for repetitions, and I'll be back with Marvin. Great question about the GLD, and yes, I think it's making something here, and I'll discuss how it should unfold and what happens if it doesn't. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We are back, and I've got the Dow down 30, S&P's down 327, and we're on with Marvin in Orlando. We're looking at the GLD. Let me just type that back in here, the GLD. There are a couple of things that I wanted to talk about. There's a pattern that I've discussed many times. I'm going to show it here in different forms. First of all, you will see that I've typed it in here. There's a little H that goes to an M pattern. It's 1. Then there's another one over here, 2. It takes time, a sideways motion. You remember when I used that volume explosion and I said it could take maybe 38 to maybe even 48 bars before it comes back for a retest. It took 46 bars and then it broke down. It made two lowercase h patterns that looked like an M. And now we're doing the very same thing in a much smaller. Usually the third time, if there is a third time, it's a very large move up. But this has started off so far with two little tiny ones, which looks like it might even have to do a retest. So let me explain a couple of things. In the pattern that I'm looking at, this is in my CD introducing the Chapman methodology, slide 334. So it's like a PowerPoint presentation, 476 slides. 27 chapters, different techniques in the Chapman wave. There's an H pattern, lowercase h, and that H pattern, when it breaks the left side low bar, it can go down, and then all of a sudden, there's a period where it stops. It finds support, and it turns into what? It turns into that M pattern. It could even turn into a continuous M pattern. And that's a pattern that's really, if you don't recognize it, it can be extremely frustrating. Why? Because every time it gets to the bottom, you think it's going to break down, but in fact, that turns out to be where you got to either be careful, or by the time it breaks down, it gaps like this is done twice already, 3 times actually. It's gapped down, or it starts the pattern towards the upside and you think, now it's going to break out, and all it does is it fails to break out the left side arch formation, high bar, and it turns around and tanks. This is the first time that we're getting an opportunity with a slight divergence in the price and positive divergence between price and the technicals, a chance for that kind of pattern to break out. But I have to admit that so far for a sector that has been so badly damaged, just powered to the downside, this has to be the first time that there's a chance that 9-period moving average in the weekly chart has a chance of being hit. So now this is what I'm going to suggest to you. I'm going to suggest possibly layers into the GLD or the equivalent of the GLD. And one way to do it is right now at 121.55, it's acting like it wants to pull back. The MACD and stochastic have given indications that are far better than it was when it made the last high on the 1st of July at 121.95. The stochastic's way higher, the MACD is way higher, and yet the price is at about the same point that it was there. The high was 121.95. Today, there's a round number 122 high. It's trading right now at 121.54. So I'm going to make the suggestion that if this is going to be, if the dollar is, you see, yeah, I need to do this if you don't mind. To give you the GLD, I need to just go back to the dollar to explain that the dollar is pulling back after a fabulous move up and a very quick move which says A to B to C to D. Now it can pull back. But the MACD is at 92%. The MACD is very strong and the stochastics at 92%. That is really strong above the 80% level where I start to get a little bit cautious. And the weekly chart says, oh, okay, you've got an alternate wave count. Could this be a brand new A, which means that it's going to go to a B and a C and a D on the upside? I have to have respect for this and be very careful and call it, at least for now, an F in the weekly and a possible F, if not a C, in the monthly, but the monthly isn't even close to being finished. Now, the difference is that the weekly chart is showing some weakness in the stochastic and the MACD. So that says the dollar could pull back, but if I put it together with the EUR-USD, the currency pair, that is the euro-dollar currency pair, that says to me that you've got almost the equivalent to the downside in the weekly euro-dollar currency pair. And in this particular instance, I just see a flat stochastic. It's the exact opposite at 7.9% in the stochastic. That's like the exact opposite of being up at the 93 level for the GLD, for the dollar. So that says to me, yeah, there could be a bounce, but you can only treat it as a bounce in the euro, and 129 is at 128.3 right now. 129.1 would be the 9-period exponential moving average. Would this be the first time that there's an opportunity to try to make, yeah, it's an inside bar so far this week. If it can break by Friday afternoon, break above 1.28974, it's gone above last week's high bar, and that is a positive. So here's my recommendation. I wouldn't get too carried away right now, but but gold is right at a moment where if it's going to work by this afternoon or tomorrow, you should see the GLD into the 121.90 to the 122.35 area. So let's leave it right there at that. I'm going to be right back with you now, and then I will give you what I would consider at least a decent plan of action. I'll be right back with Marvin.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow's struggling back at minus 22 now. The S&P's only down 255. Yesterday, IBM was the weak link in the Dow. Otherwise, they all had fabulous days. And my Dow quartet, out of the quartet, 3 of them are doing really well. GE's doing quite nicely. Triple M and UTX are doing well. I think that's a good sign so far for this market. We're going to deal with that a little later. Now we've got Marvin. So, Marvin, this is the story. You've got no position in the GLD at this time, right?
That's right.
So this is what I'm going to recommend. I've done a little work on the gold contract itself. Because this is the second week above the low that was recently made in the... Oops, I've got to have something to drink. Hold on. Aha. Still got a scratchy throat there. 1179.40 was the low. 1179.40 in the contract. That was 3 weeks ago. This is the second week with a candle above the low. I'm going to recommend that I'm not expecting anything spectacular at this particular point until the dollar tells me that weakness is flowing. If there is weakness, it flows into the stochastic, and the stochastic and the MACD starts to sharply decline. At this point, they're saying high-level consolidation. Don't expect too much from gold until you get to the trigger points. Maybe the Fed is the trigger point today. I'm going to suggest a small position in the GLD, and when I said to you earlier on, I would prefer to scale up than to scale down the GLD. I'll tell you why. If this pattern fails, and let me expand it. We've seen it so many times in the GLD. Although it's a little mini one right now, if the same pattern fails because it's gone below the low of yesterday, which was 1232, which doesn't sound very far away, but actually it should be far away. If this is in an uptrend, then it shouldn't even think of coming back there. Then it could very quickly retest the low of 1206.90. I suspect that a tremendous amount of work's been done on the downside, and that even though there won't be a spectacular move yet on the upside, there is more upside potential right now than downside potential. But I'm looking at some of the gold stocks, and they're refusing to move. So this is a gold move first, and a gold stock move would be later. So if I'm correct, I'm going to say start a small position now. What I want to see is how quickly the 1267 high of the 2nd of July is taken out. If it goes above the little doji candle of 625, I'm looking at the GC. Let me go back to the gold contract. You know what I'm talking about, because I'm talking about the gold contract. I want the GLD. If it goes above 121.95, and it spikes above it, and those little three dojis, those really indecisive three dojis that start on the 21st, 24th, and 25th of June, if it can at any point in the next, I would say it must be quickly, if it stalls, it's just going sideways, and you're using up all this power of the stochastic and the MACD, it's wheel spinning. In other words, it's trying to move forward, but it's on ice or it's on sand, and the wheel is spinning, the engine's running. This is how the dollar used to travel on the upside. It looked like it was doing great, but when you looked at it in the chart, it really wasn't so great. That's because the Fed was pushing it down, just like the Fed is propping up bonds. I'm going to suggest that you just nibble on it right now. I don't want to see the GLD take out 118.93. It sounds like it's far away. That's what I wanted to say, because it's 3 days ago and there's been a little bit of a move to the upside. If it takes that out, then this is M pattern that is once again to have another dip and retest, or try to retest the low between 114.68 and maybe 115.10. So I'm going to suggest starting a position. The reason why I say to buy on the upside move is that if you start a position at 121.32, and it goes to 120, what was the high today? 122 and 121.95. So it's gone above that. That's a positive. Okay. And if it goes to 122.35, you could add another little position, but I would do it probably, I'd want to see it with the dollar coming down. So small position, you could add another small position. I would prefer that to have a small position now, and then say to add another one at 118.90, because I don't think it's going to break the low. I don't know if it's going to break the low. The pattern has always done that. It's always made the H to an M pattern and then broken the low. This is the shortest it's done it, but we'll have to see what happens. So the technicals are saying it should be moving up. It's lousy. It's up 0.68 right now. Wow. After being beaten down, I have to tell you, after beating down like this, a V-shaped turnaround should have seen the GLD at 125.50 to 126.70, if not right into the gap of 126.30 and higher from the 20th of June. So far, this to me is just terrible action. I would nibble on it because I think there's upside potential. I don't yet see anything like a V-shaped pattern forming. But if it does start to break to the upside, you can add a little bit more. So step in. And what kind of stop would I use right now? If you step in with a small position, I would make it like one. You can make it 2% on a small position. I think that's reasonable, or 1.5%. You must decide what kind of stop you're comfortable with. But the weekly chart's going to be really important. Friday afternoon, if gold, which usually turns down on Friday, if the GLD is above 122.74 Friday afternoon at 4 o'clock, then you've got yourself a nice week coming up next week for gold. Hope that helps you.
Thank you very much.
My pleasure. It did take a long time, but I wanted to cover a bunch of things at the same time. Okay, folks, I wanted to do this. I had a question, email question from Jim. Who's done my Master Trader series, done a lot of work on the QQQs, and I'm going to show this right now. The QQQs are acting very well. There's no other way I can count it other than this is leg B, but it's what I call the gray B. So let me just change the color. Gray B. What does a gray B mean? It's not a bid. This is not a pirate ship or anything like that. This is underneath the previous major high of 74.95, the QQQ Power Shares Trust Series, peak D made on the 22nd of May. It plunged for this index. It's a plunge down to 69.84. Actually, it's only 5 points, but in fact, this thing didn't drop 5 points very quickly. This is the first time it does something like that. And now it's coming back. But until it really decisively breaks 73.72, the high of the 18th of June, to be able to target the other high, I have to consider that it is in a retracement mode. But the stochastics at 79.45, I want to see it at 80% or higher. Now let's introduce what really was being asked by Jim. He knows this pattern very well that I talk about. That I call it the falling axe pattern, but in fact it's a declining cone formation. Lower highs and much lower lows. When it breaks out, if certain conditions are met, you can see a 1-to-1 expansion, which says from 69.84 to 72.69. That's 3 points. You can see, and I usually go from the most recent trough to the upside first. From 71.35, you can see move to 74.35. What does it do? It takes you towards the left side high bar, number one. Number two is, if this is going to succeed to be a 1-to-1, then a powerful move that incorporates the weekly and the monthly chart says that you could get a 3-point move up from the breakout, which would be right there at 72.71. That takes you to 75. Scratch your throat. 75, somewhere around the 75-80 area. Excuse me. Now let's look at the weekly chart. The weekly chart, I would say, is a little deep for this, but it has broken to the upside, but the week is not finished. What does this say about the potential for the weekly chart to skyrocket right into a leg E above 74.95 in this move here? And then you've got to be very careful, because a very quick D to E sometimes can start a very choppy move. Well, let's look at that potential. Number one. Yeah, let's look at that potential. Number one is the MACD in the monthly chart is positive, but just barely positive, and that's saying, hey, you can move to the upside, but at this point it's going to be limited, number one. Number two is the stochastics at 87%. It is turning down a little bit, and the on-balance volume is just turning down a little bit, but so far this is all very good action, but hey, we're not even to halfway into the month. So all I can say is if. I don't want to do that. I'm just going to say the new high above 74.95 in July puts in place a number of factors which would coincide with many things that I'm looking at, but I'm not going to get into that right now. What I do want to get into is to say the action on the weekly chart. As you can see, when it was down here, the weekly stochastic and MACD were very poor. Now you've had a very strong move up with the technicals concurring in the daily, and that has now helped the weekly. The monthly has barely done anything. It's barely moved. So that's what I mean when the question was asked the other day about, talk about the sandwich, that's what I call it. The sandwich is when you are looking at a short time frame, then you've got a longer time frame, and then a very long time frame. The shorter time frame, if it has a very sharp move up or down, will be reflected in one candlestick bar, or it doesn't have to be candlestick, I'm doing candlestick right now, in that middle chart, and that'll be, you can see a 50% move in that one candle, and it looks like it's not so steep in the daily, but you suddenly look at the in this case the weekly, and you say, oh, that is really a big move. And then the monthly, if the monthly has been very strong, it barely shows anything. That means it's going to take a long time or a lot of price movement in the shorter time frame to repair the damage in the weekly. And that weekly has to be kept in mind all the time, because you want to see the... I'm getting upset as I'm talking here. You want to see the weekly moving. I'm going to talk about a stock right now because we've missed this buy, at least for now. There's a stock that was an IPO. I looked at it the other day, and I said, what on earth is this? Actually, what happened was I was going to type in Panera, and I got a symbol all wrong, and I typed in RNA, At exactly the same time, it went right by on the ticker. I didn't realize it was an IPO. I said, what is RNA? So RNA was at that point right over, that was Monday. So here we are. Monday was the 6th. This is the 10th. So that's 9/8, the 8th. So there it is, right there, that little candle. And I'm looking at it and I say, I don't know what this is. And it turns out Prosensa Holdings is what I'm looking at. And Prosensa Holdings on the 120-minute chart is about to spike to leg D. I thought, gee, I don't know if I want an IPO in leg D in the 120-minute chart. So yesterday, instead of putting it down as something that I'm looking to buy, I said, I'll just wait the day out. Well, during the day, I'm looking at it, and it goes by. I would not have got it because it gapped up. I would not have bought the gap because it had closed on Monday at 19.63. I would have said to buy it under 19.55, something like that, with a very tight stop at the 200-period moving average and a small position because it's an IPO and it's a biotech, etc., blah, 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 blah. Next thing I see, it's spiraling higher. So today I said, I actually blipped out the buy, but today I said, please read the comments. Let's see how the 22.21 support is tested. We might try to start a small long around 21.60s. I had a buy-in at 21.61 or 2. I changed it. I said, I've got so many things going on in my newsletter. This is such a pivotal moment. I don't want to be doing too many things at once. So I said, let's watch how it gets in 21.60s. Look what it did. It opens at 22.80. It opens at 24.40. It closed yesterday at 23.50. It gaps up at 24.40. It goes to 24.90. 24. And then what happens? It starts an immediate slide, and it goes to where? 22.73. So even if I had the buy-in, which I thought was quite, that's a sharp pullback, right, after a move like that, based on the 120-minute chart, and I want to use the 9-period moving average as a stop, well, we would have missed it. It's trading at $24.90. So I like to be as precise as I can. It cost us a point. It didn't cost us anything. Yeah, it just cost us opportunity. The other day we had a buy-in. There was a question in the den about DDD. I had a buy-in on DDD, a stock that I've liked and not liked for a long time. It goes in and out of phase with me. I wanted to buy it, and I said we will buy it, and we bought it at 47.24 2 days ago. Right, it had closed at 47.72, 47.72, and I said to buy it at 47.24, which is quite a bit lower. So what happens is spirals up to 48.50, and it comes all the way down to 46.20. Takes us out by a few cents. Why did I want to buy it? Because the same methodology I've been talking about. You remember the falling axe? Well, this is the same type of thing. There's that channel. There's a flag pattern. Because if it holds the 9-period moving average, pulls back from C, it should go to D. All I wanted was to have the trade from 47.24 to above 48.50 and then raise the stop. So today it goes to 48.43. It's almost there in leg D. So we lost the point because I didn't expect it to pull back as sharply as it did. The concept was right. So sometimes you do everything right, but you just miss that entry point. Hey, it happens. But that's the name of the game. We'll be back with Dave in Boston straight after this. Basil Chapman, Dow's down 24, S&P's down 273.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there. Whether it be our health, career, or our finances, some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow is down 20. We're waiting for the Fed, and lately the Fed has turned into a bad news event, but I still have that leg D to come in the daily charts, and then we'll see. So we'll see what happens. Let's go to Dave in Boston. Hi Dave, how are you?
Hi Basil, how are you today?
Very well, thank you.
Very good. I was just going to ask you about that. I was thinking of taking a short-term short using the SPXS, thinking we may get a pullback here. I was just wondering what your take on that was.
My take is that the timing has to be exactly right, because if you do it now, and I'm still expecting a leg D to the upside, it means that you're going to have to sit and wait to see if D goes to an E and F, because we've seen that the IWM and the Qs are, no matter how I count it, are in leg B. It is a gray B and it can fail under the previous high, but boy, with everything going on, I think this is, with Triple M, UTX, and even GE acting quite well, two of them are actually almost at all-time highs. I'm reluctant right now to say grab it just because it could pull back. But what I would say is if I do get that leg D to the upside in the S&P, well, let me do two things. There's the pattern that I've just been talking about, that the pattern that I call the cone formation that expands to the downside. Well, it's very clear on the weekly chart of the S&P, and it says that because if 1654.19 was the week of the 21st of June, that was the high. We've made a high so far of 1654.18, 2 cents less than a breakout above that. No, I shouldn't call it a breakout, but a move above it, 1 penny above it. If there is a close in the next 2 days above that, I automatically have to think there's a very good chance it's going to try to go, the S&P is going to go try towards the 1687.18 high on the weekly to test that high. It doesn't have to, but that would say to me, if it shows that kind of strength, and closes there, then what's happened is that in the daily chart, you've gotten a move. You see, I can do the same thing in the daily chart. It's nicely above. Oh, it's very much above that pattern that I call that falling axe. That's got a 1-to-1, and these don't always work out, but when they do, they are spectacular. So I'm just saying to you, I would be a little hesitant in starting the position right here. I know we might miss it because the peak C could fail. I would prefer to see you try it higher up and getting closer towards the all-time high. And the reason being, the SPX moves so quickly. Talking about so quickly, the Don stock I was talking about, RNA, just hit 25.30. Oh, my goodness, that would have been, what a move. Okay, so back to our story. That's number one. Number two is I keep looking for shorts. I'm hunting around for shorts, and every time I find something that looks like it has the potential for a short, it's just recycled up. This recycling is really a very bullish thing. That's number one. And number two is that the volatility index is going to be so important. VIX.X is trading. Oh, I missed it. $VIX.X. There it is. Yeah, it's at 1451, and the stochastic's flattening out at 2.57. So this is extremely oversold. It says, yeah, there's an opportunity at some time very soon for the VIX to bounce, but until it really spirals above 1557, 1559, 1598's resistance is at 1451 right now. It's going to say that it's just going to hang around here based on the weekly chart. So here's my recommendation. I'm wrong if by the end of the day the Dow's down about 95 or 120 points, because it's going to have to work very hard to try to get to that leg D. And that says that the leg D could just be a nominal D, and then it could start another deeper move to the downside. If by the end of the day we're only down minus 30 in the Dow, minus 4.30 in the S&P, then let's wait to see if tomorrow or Friday you don't get a spike to the upside. That's the time that I think it would be best to be looking at it. Maybe we'll look at it together tomorrow if you don't mind. So I'm just saying, for my purpose, hold off for at least another day or two, okay?
Thanks, Basil. I'll call you tomorrow.
Thanks for calling, Dave. Love to hear from you. Folks, stay tuned. Larry Pesavento coming up. Great shows all day. And, of course, I'll be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.